Hey guys, welcome back to your favorite YouTube channel, Startup Yourself. We're back yet again with another awesome video that might set you up for life. As the markets sink again, investors have been trying to figure out the best way to negotiate a period of high inflation, and who better than Warren Buffett to explain all that. So, without further ado, we share what Buffett thinks about investing during inflationary periods. Warren Buffett, the chairman and CEO of Berkshire Hathaway, has plenty to smile about these days. The luck lords seem especially happy with him. Reportedly, shares of his beloved Berkshire Hathaway have soared more than 20% so far in 2021. The man is sometimes known in the media as the god of investing, and rightly so. If you are a devoted stock trader, or even if you know anything about the stock market, you must have heard this famous statement of Buffett. "We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful." In April of 2021, consumer prices jumped to 4.2% compared to last year. It is said to be the largest increase since September of 2008. Investors are worried that we might be headed for a return to the 1970s when inflation reached double digits. Warren Buffett has been quite vocal on the subject of inflation in the past period of rising prices. He has always been an avid believer of the fact that staying invested in stocks is the only course. Throughout his life, and it's been a long life considering he's 91, Warren Buffett has said many wise words on investment during times of inflation. In the late 1970s and early 1980s, Buffett devoted significant portions of the Berkshire Hathaway annual letters to investing in stocks during periods of high inflation. He has since then, time and time again, explained what rising prices mean for stocks and what investors need to look out for. Buffett lived and invested through a period when inflation hit 14% and mortgage rates spiked as high as 20%. We're talking about the time what some call the greatest American macroeconomic failure of the post-World War II period. The 1970s was indeed a lost decade for stocks. So there can't be anyone better than Buffett to explain some of the basic mechanisms that are at work when stocks run into inflation. Known as the Oracle of Omaha, Warren is one of the most successful investors of all time. In his letters, Buffett talks about what he calls the investor's misery index. When you take into account the rate of inflation and you couple that with either the taxes you have to pay on income received through dividends and the capital gains tax on selling, your real return on the investment could be negative, even if the business is doing well. If you're enjoying the video or find it useful, how about you take a minute to scroll down and hit the like button. Also, subscribe to the channel if you haven't already. Turn on the bell icon so that you don't miss out on any of our upcoming videos too. Inflation basically means a general increase in prices, and it causes you to lose your purchasing power over time. According to Buffett, the worst type of investments to own during periods of high inflation are the assets denoted in the currency that is being inflated. These type of assets take a massive hit during inflation. Also included in this category are the unproductive assets such as property, gold, etc. Because although they tend to maintain their real value during inflation, they don't increase your purchasing power. Productive assets that produce valuable services or products can be a good float for inflationary periods. Businesses with pricing power without the need for heavy capital investments tend to be great options for such times. Investors should focus on companies that generate rather than consume cash and look for companies that can raise prices during periods of higher inflation. But an investor's best bet during times of inflation is his own earning power. What we mean by that is the best protection against inflation is to actually invest in yourself, your talents. If you are successful in making yourself valuable, you don't have to worry about the currency value. You'll be able to maintain your purchasing power over time, and once the inflation settles, you'll be in a good shape to invest. There's no solution to inflation, but surely there's a reason for maybe a little hope. Another investment that Buffett suggests for investors that are worried about inflation is Treasury Inflation Protected Securities, or TIPS. TIPS pay investors a fixed interest rate twice a year. The good thing is that the principal amount is adjusted for inflation, as measured by the Consumer Price Index. Warren Buffett has been through enough market cycles to know how inflation hurts stocks. As the economy recovers from the COVID-19 pandemic, prices are on the rise again. We cannot yet say for sure if the current spike in inflation is likely to last or if it will prove to be temporary. In a time like this, it's worth revisiting some of the Buffett's best suggestions for combating what he once referred to as a gigantic corporate tapeworm. And this brings us to the end of the video. Thank you guys for sticking with us. It looks like inflation might return in a major way, and should that happen, investors should be ready to know beforehand how they can protect themselves from having the value of their portfolios eroded. Share your thoughts with us in the comment section below, and we'll see you next time.